Welcome back to Money Exchange. We talk about it every week here on the show, and I continue to remind my traders and investors at LTG Gold Rock that the one thing they must continue to learn about when it comes to currencies is interest rates. What is the expectation amongst hedge funds and large speculators with respect to interest rates and stimulus programs at central banks? Understand this and you're going to give yourself a genuine chance to make a higher return on investment no matter what market you're trading. Interest rates make the financial world go around, period. So tonight on the show, I'm going to tell you what the expectations are of hedge funds and large speculators when it comes to interest rates and stimulus programs at central banks, and then I'm going to tell you what direction the related currency will likely go in the next 6 to 9 months. And you can put me to the test, and in a few months' time, if I'm wrong, you can throw all the eggs you like. But I can tell you, I'll only be wrong if expectations change, and the expectations will only change on comments or decisions from central banks. So quickly grab a pen and paper. Here goes. Let's start with Australia. The RBA to drop the official cash rate to 1.75% and possibly 1.5% by June next year. The Aussie dollar will continue to fall in value in 2016. The RBNZ to drop the official cash rate once, if not twice, in the next 3 to 6 months. The Kiwi dollar will continue to fall in value next year. The Bank of Japan to leave the official interest rate at 0% and add more stimulus. The yen will likely weaken in value, particularly against the US dollar and the pound. The US Federal Reserve is set to raise official interest rates. The US dollar will continue to rise against the euro, Aussie and Kiwi and emerging market currencies. Over to the Bank of Canada, and they'll likely drop official interest rates again in the coming months. The Canadian dollar, whilst oil is low, will continue to lose value, particularly against the US dollar. The Bank of England will raise its official interest rate before April 2016. Remember, we were in London last week, spoke to Jay Morgie from Go Markets, and he said he expected a rate rise in the first quarter of next year. I agree, the pound will continue to rise against emerging market economies and the Aussie, Kiwi and the euro. Now, finally, the European Central Bank. They'll add more stimulus, I believe, in December and may even lower interest rates below zero. The euro will fall in value to 103 or lower against the US dollar and will also weaken substantially against the pound. And again, last week in London, we were talking about the euro, and of course many banks are predicting it's going to go much lower. So there you go, my predictions on what central banks will do and how currencies will react. If you weren't able to write any of that down and you don't think you'll remember, just go to moneyexchangetv.com and you can download my mid-year currency update. It's all listed there for you, so you can jump onto the website right now. Now, it's time for our currency quiz question of the week. But first, congratulations to Lauren from Sydney, the currency quiz winner from last week. So, for $500, be the first person to go to moneyexchangetv.com right now and answer the following question, and you'll win this week's cash. We've talked about central bank interest rates in the last segment of this week's show. The Reserve Bank of Australia meets next week to announce what it will do with interest rates and has dropped the official cash interest rate from 4.75% in 2011 to now be at an all-time historic low. 4.75% to now an historic low. The question is, what is the official interest rate right now at the Reserve Bank of Australia? What's the official interest rate right now? Go to moneyexchangetv.com, and if you're the first person to type in the answer and be correct, of course, you'll win $500 cash. That's moneyexchangetv.com. Well, one of the most important things that I learnt about 5 years ago that made a substantial difference to my own return on investment was to start to really focus on fundamentals and the economic data. And what I've found over the years, hiring traders that have come from Goldman Sachs, Credit Suisse, Cantor Fitzgerald, BNP Paribas, some of the biggest banks in the world, including Credit Suisse, to work with us, is that interest rates and fundamental economic data makes the biggest impact on global currency markets. And if you're able to spend the time each week in understanding what it is central banks are likely going to do and the expectation of what traders, hedge funds and speculators are thinking about that, you're going to position your money on the right side of the market. I haven't told a single trader to buy the Aussie dollar in the last 4 years, and interest rates have fallen from 4.75% to now, I may as well tell you because someone already would have got the question right already, down to 2%. And that's what we've seen with the Aussie dollar as well, falling from all the way up there at 110 to the US dollar to be now trading at a low of 68 a month or two ago here in Australia. And of course the Kiwi dollar to fall as well. So focus on those central bank interest rate expectations, get that right, and you'll have a fundamental directional view and you'll trade the currency markets in the right direction the vast majority of the time. So make sure you keep an eye on the US Fed, the Bank of Japan, the Bank of England, and all of those major central banks. Well, that's about all we have time for this week in the program. Thanks for your company. Until I see you again next week, happy trading.